Not a great week for Tesla. Earnings came out, they mostly beat, but losses widened on lower than expected deliveries. Two manufacturing executives left, and Jim Chanos came out and said he is going to short the company or is shorting the company. So, Aaron, is there a reason for concern?
There's a lot of reason for concern. They're blowing through a ton of cash. Although, having said that, I would be very wary about betting against Elon Musk and Tesla because the bears have been left by the wayside by what the stock has done the last couple of years. It had a dip late last year, then it came roaring back. He's P.T. Barnum and Steve Jobs and Albert Einstein rolled into one. It depends on your perspective which one of them he is. But he's definitely made it harder on himself by moving that production target back 2 years.
Well, that was another big piece of news this week, almost kind of dwarfed the earnings news, Brian. I mean, he's really said we're going to hit this 500,000 vehicle milestone 2 years ahead of plan.
I mean, you say it was a bad week for Tesla. Jim Chanos short, maybe that doesn't look so good, but for Elon Musk, I think he begs to differ. He says, hey, full speed ahead, and he's used to magical thinking. I mean, when he started out, this whole thing seemed like crazy, and he's producing these high-quality cars, and they got this flood of orders, which gave them the confidence to get more aggressive. And I think, okay, they lose some manufacturing guys, he'll get new manufacturing guys, and maybe he'll run through a few more by the time they get there, but I wouldn't count it out.
I just think, though, it's to put that kind of pressure on a company, and now it's going to be so public. But he's talked about having a sleeping bag in the office, and I have to say, this is how Volkswagen got into trouble. There was so much pressure from the top, we've got to beat Toyota. There were other issues. I'm not comparing the two, but I'm just saying sometimes those pressures.
And well, he said he's putting his desk at the end of the manufacturing line, right? So that's why he's saying he's all in on this manufacturing. Right. The real issue for them is that they're going to have to raise additional capital in order to meet those production targets that they just set for themselves. Mm-hmm. And so that could weigh on the stock if they issue more shares or they take on debt. And if the stock goes down, then some of the magic starts to rub off, and who knows how that filters out. But again, people have been shorting Tesla for years, get their head handed to them. Jim Chanos is a really smart guy. Maybe he's got the timing better, but it's just hard to bet against Elon Musk.
Also, what's going to be more difficult? Producing some cars or retiring on Mars? It's all relative with Elon Musk.
That's true.
He's got a lot of goals that are different from yours.
And the Hyperloop, right? It's all,
Good point. And this Model 3, if it hits a mass market, there's a lot of potential to that for sure.
Thing,
I think orders are looking good. But we also had this week, April auto sales came out, and they were through the roof. They were an 11-year record. So what's driving this, so to speak, Brian?
I would say, it's sort of simple economics, really. We've had a long recovery. It's maybe not robust right now, but the fleet of the cars on the road is kind of aging, and people need new cars, and I think they've finally saved a little money, and they're ready to go out and buy a new car.
I guess it just seems to go against so many trends, driverless cars, texting millennials, ride sharing, and yet, we're still selling so many cars.
But most of the country still drives, right?
Yes.
We live in an urban environment, right?
Yes.
I have 2 cars actually, and subprime lending in the auto sector is up big, and the unemployment rate's at 5%.
Yeah.
If you have a job and you have to get there, you feel more confident that you're going to go out and make a car payment and not trade in your old clunker. And as Brian said, the fleet got really old in this country.
Right. It is interesting to look at the valuation, though. I saw a stat this week that Wall Street is valuing GM at $4,800 per car, and Tesla $620,000 per car. So there are a whole lot of expectations.
Future growth.
It's all, and that's the thing. It's always been about future growth with Tesla, and they moved the target back 2 years. So now it's easier to analyze the stock. That could be a challenge for them too. It used to be like, well, it's 5 years out. Now it's only 2 years away, and that could be a challenge for the bulls, for sure.